Hi, and how are you doing this evening? I welcome you to yet another promising session where we shall be taking a technical dissection of the US oil chart. Well, this is a follow up detail to my previous analysis on this pair, where during the course of last week's trading session, we were able to scoop in over 800 pips in profit. And talking about last week's trading session, I would like us to quickly run through the key moments that we had during the course of last week's trading session before we go into the details of this week. Well, this helps us to understand and giving us a background knowledge of what really happened in this market from a technical standpoint. Hence, we can be able to identify potential price movement against the new week. Well, as we talk about the last week trading session, we had a situation here. If you remember vividly how price action um, fell into a channel between the $67.50 area and the $65 level, which happened to be the lowest point price action had ever been since December 2021. And considering the fact that that area has been a strong support line and at the same time was the support line of the descending channel we identified on a higher time frame, we were looking forward to price action breaking down that structure, retest that level to incite a bearish momentum to the downside. And in fact, we had our sell stop triggered, but unfortunately, we were taken out of that position as we had our first lost trade for the week at that point. So we saw our price action took us out of that position in a loss at around the $66.50 level. And it was at this point we needed to be very patient to see where price action is actually going for the week. So we had a situation here where price continued to trade within that channel we identified earlier, just right between the 67.5 and the 65.00 level. Now we had our buy stop above the 67.5 area, which happened to be the resistant line for the week. And look at what we have here. We saw how price action finally broke out the resistant point of that structure to trigger our first buy position for the week. Then we anticipated another breakout of the $68.50 level to add more position to our existing trade. And as you can see here, price action moved significantly well in our favor, triggering our second position, and we were able to recoup the loss that we had at the beginning of the week. We continue to look out for more opportunities as price action continue to break out key structures like the $68.50 level. Then we also had price continue to trade along that trend line we identified earlier. As you can see, we had another position above the breakout of the $69.40 level, added more position here at the breakout of the $70 area, but that did not last long. As you can see here, we begin to see sell pressure resume. And okay, we had the breakout of the $71 area too as well, which gave us the fifth position that we had. And at this point in time, we had a sell pressure resume, taking us out of all our buy position. We had about 800 pips in profit. Then afterwards, we begin to see some sell pressure resume at this point. Then we were looking forward to a breakdown of the $70 area to trigger that sell position. And that was exactly what happened. Price action moved for about I think about 60-50 pips thereabout before another wave of bullish momentum happened. So it was quite a roller coaster of buys and sells anyway, but majorly of buying opportunity, and it was at least a profitable week for us as we rode the move all the way from the $65 level into the $71 area. If you do want to have a view of how we took advantage of this trading opportunity, I will be dropping the link to this commentary right in the comments in the description box below this video. And if you are watching this from my YouTube channel, you will be seeing it at the top right hand side of your screen right now. All right, so with that being said, here we shall be going right into the daily time frame here to look at things from a technical standpoint and see how we could actually position ourselves in anticipation of a potential move this week. Well, if you look at the current structure here on the daily time frame, which we have been emphasizing prior to this video, it has been quite bearish in this market. And to further emphasize the strength of the sellers in this market, we connected a series of lower highs throughout the second half of last year, hereby giving us this bearish trend line that you can see on your screen right now. But that is not the most important structure we want to be focusing on ahead of the new week. But an area we want to be looking at falls right between the beginning of this month of March. Prior to the beginning of this month, we saw how price was trapped within the channel here between the $82 level and the $70 area to further emphasize the indecision in this market. However, the breakdown of the $70 area a couple of weeks ago was a beautiful bearish signal from a theoretical standpoint that price might likely be going to the downside. However, when we look at what happened here during the course of last week's trading session, we saw that as soon as price got into that $65 level, we begin to see some buy pressure resume around that area, giving us a clue that sellers are not finding it easy to break down that structure, as we can see here our buying pressure resumed from that area. And if you remember vividly during the course of my previous video on the US oil, I laid emphasis on how important that $65 level has been, and we went to as far back as 2005 to acknowledge how that level has been a major determinant of price action. I wouldn't be going into that details here, but if you do want to have a look into how what I explained in that video, you might want to check out my previous video on the US oil. So with the situation we have right here, as price action remains between the $60 level and the $70 area and the $65 level in the last couple of weeks, this is where we shall be focusing our attention as we head into the new week. Now, if you look at the situation here following the impulsive move that broke down these key structures, remember it broke down the bullish trend line here, which is the red dotted line on your screen right now, break down the $70 level, and what we saw afterward was price rejecting the $65 level with multiple buy pressure around that area, bringing price back into the $70 level. And if you look at what happened during the course of last week's trading session, I mean the last trading day of last week's trading session, you will see the nature of the last candle here for last week closed in the form of what looks more like a hammer candle at this point. And you all know from a technical standpoint what an hammer candle is. It indicates and gives us a clue into the presence of buying pressure around this area. And the first thing I thought about the situation here is that we might likely see a situation where the consolidation phase we are witnessing here could transition into a reversal pattern in the form of a double bottom structure where price finds a higher low, unable to break the previous low here at the $65 level to give us a situation that looks more like a double bottom structure. And if this is going to be happening this week, then definitely we want to be having the neckline of this reversal pattern, which coincidentally shares a confluence with that $70 area. And one thing we need here to make this structure valid is to see price action do a breakout of the structure, retest probably with some buy pressure around this area on our lower time frame to give us that confirmation of a trend continuation to the upside. So this is one of the perspective we shall be looking at going into the week. Well, if this is going to be valid only if price is unable to break the previous low. So that is one scenario here that we might be looking forward to. But if price action breaks down the $65 level, well, we will have no choice than to start looking out for selling opportunities, as the breakdown of this level will rather confirm that the sellers are becoming stronger at this particular point in time. Then another thing I would like us to take into consideration from the fundamental perspective is that the OPEC Plus is having a meeting on April 3rd, that is it next week, and there is a high chance that they might be preparing a package that will spike the oil price in the market. So we are going to be looking forward to that too as well. But obviously, I'm of the opinion that we shall be seeing the reflection in anticipation of this event on the chart as price action. So at this point in time, what I did immediately after identifying the structure on my daily time frame was to scale down to a much more lower time frame where I was able to identify a simple setup that I think we can use to guide our trading activity for this week. So join me as we scale down to a much more lower time frame, like the 4 hours time frame here in this case here. And this is what I was able to identify on the 4 hours time frame. So if I zoom things out a little bit and look at what has been happening here since the month of March, obviously you can see here that price action has been bearish in this market, and to further emphasize the strength of the sellers at this particular juncture in this market, you can see that after connecting the series of lower highs here, we have a beautiful bearish trend line to emphasize the strength of the sellers in this particular market. However, if we look at what has been happening here in the last couple of weeks, which I actually emphasized on the daily time frame, you will see that we are still trapped within the $71 area, somewhere around here, which is happens to be the resistance point of this channel, and the support line here at the $65 area. Now, look at the structure here. We have been seeing selling pressure here throughout the course of last week as sellers continue to reject all attempt by the buyers to break out of that structure. And looking at this area here, it also shares a beautiful confluence with that bearish trend line, where I'm of the opinion that we cannot ignore the potentials of the sellers at this particular point in time. So, in order to find a simple setup or a way of looking out for a trading opportunity that can easily be seen to take advantage of a move this week, I was able to identify the structure here at the $67.50 level, which happened to be a major determinant of price action here in the last couple of weeks. As you can see, it has at one point in time served as a demand zone, and at some point in time, it was serving as a um, as a as a sell zone in this market. So for me to be selling the US oil here, if this bearish trend line continue to become strong enough to push this bearish move to the downside, then I would want to see a breakdown of the $67.50 level with selling pressure right below the structure on my lower time frame to join a sell continuation to the downside. And if the further breakdown of the $65 level happens, I want to be adding more position to my existing trade. So that is one perspective here if we are going to be selling the US oil for this week. However, if we have a situation here where bullish pressure continues, look at what happened here on Friday. We saw this huge, this bullish candle here. Not that huge, anyways, but it's a bullish candle. And following this bullish candle, we have a hammer candle afterwards, which further gives us a clue into the presence of buying potential around that area. So if we have a situation next week where the trend line is breached, that is, price breaks out of that trend line to the upside, we might likely be seeing a situation where the trend line may no longer be strong enough to hold the sell momentum in this market. And if this leads into a further breakout of the $71 area, this would likely be a very beautiful opportunity to join a bullish momentum if we see buying pressure resume just above the bearish trend line. So these are the things I will be looking forward to this week. So like I said earlier, the $67.50 area at this point will be guiding or will be serving as a yardstick for trading activity. As if price remains above that structure, we look out for buying opportunity. And if price breaks down the structure, we'll definitely be looking out for selling pressure to give us that leverage to join a bearish move. I will be pausing the video at this point, and be rest assured that I will be jumping right in the comment section of this video on Monday morning to give you an update on what my expectations are after monitoring how participants in this market will be reacting to this current structure during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the US oil commodity. And if it truly did, why not support this project by clicking the like button? You would also want to follow me on my TradingView platform at Dark Sherry, spelled DARCSHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.